Why the stock market crashes daily. Will it crash again? The most important thing you need to know. Red stock charts, frantic traders, alarming headlines like market meltdown, recession fears surge and suicide, and another market crash imminent. The stock market, once a symbol of growth and prosperity, now feels like a roller coaster spiraling out of control. Why is it crashing almost daily? Are we heading for another catastrophic collapse? And most importantly, how can you protect yourself and your investments? In this video, we'll break it all down, why the market keeps crashing, whether it will happen again, and the single most important thing every investor needs to know to survive this chaos. Let's dive in. Welcome to Joy Richer, your trusted source for insights on politics, economics, and the stories that shape your life. Today's topic, the turbulent stock market. If you've checked your portfolio lately, you might be asking yourself, why does the market keep crashing? Is this just a phase? Or are we staring at another 2008-like collapse? And most critically, how do we navigate through this? The answers are rooted in a combination of global factors, like inflation, geopolitical tensions, interest rates, and market psychology. But first, let's explore the biggest question on everyone's mind. To understand why the stock market is crashing, we need to look at several key factors driving this turmoil. 1. High inflation. Charts showing inflation rates climbing over the years. Explanation. Inflation has skyrocketed to levels we haven't seen in decades. When prices rise too quickly, it eats into corporate profits, reduces consumer spending, and creates uncertainty. 3 things the stock market hates. 2. Rising interest rates, Federal Reserve rate announcements. Explanation. To fight inflation, central banks like the Federal Reserve raise interest rates. Higher rates mean borrowing money becomes more expensive for companies and individuals, which slows down economic growth and ultimately drags down the stock market. 3. Geopolitical tensions, war zones, oil price charts, supply chain issues. Explanation. From wars to supply chain disruptions, geopolitical events create uncertainty. For instance, the energy crisis caused by international conflicts has pushed up costs, disrupted markets, and spooked investors. 4. Market psychology, visuals, panicked investors, sell-offs, headlines. Explanation. Investor sentiment can be just as influential as economic data. When fear takes hold, people start selling their stocks, driving prices down further, and creating a self-fulfilling cycle of panic. 5. Tech stock. Overvaluation. Charts of major tech companies showing sharp declines. Explanation. Tech stocks that surged during the pandemic are now facing reality checks. Many were overvalued, and as earnings disappoint, the sector has been hit hard, dragging down the broader market. Host wrap-up for segment. So, inflation, rising interest rates, geopolitical instability, market psychology, and tech stock corrections are creating a perfect storm. But will the market keep crashing? Segment 2. Will the market crash again? Host. The big question on everyone's mind. Is the worst over, or are we heading for another major crash? Let's analyze the possibilities. 1. Optimistic scenario. Green stock charts, growing economies. Explanation. If inflation cools and central banks pause rate hikes, the market could stabilize. Historically, markets recover over time, but this depends on governments and corporations taking effective action. 2. Pessimistic scenario. Historical crashes like 2008, 1929. Explanation. If inflation remains stubborn and global conflicts escalate, we could see another major crash. Economic recessions typically lead to higher unemployment, lower spending, and sharp declines in corporate profits. 3. Key indicators to watch. Visuals. Economic data like GDP growth, unemployment rates, and corporate earnings. Explanation. Keep an eye on leading indicators like inflation, trends, interest rate changes, corporate earnings reports, consumer confidence indexes. These can give us clues about whether the market will stabilize or crash further. Segment 3. The most important thing in the stock market. Host. Now, let's get to the heart of this video. The single most important thing you need to focus on during turbulent times in the stock market. 1. Think long-term. Historical stock market growth charts, S&P 500 over decades. Explanation. The stock market has always been volatile in the short term, but over the long term it trends upwards. If you're investing for retirement or other long-term goals, staying the course is often the best strategy. 2. Diversification. A pie chart of a diversified portfolio. Explanation. Don't put all your eggs in one basket. Spread your investments across different asset classes, like stocks, bonds, real estate, and even cash reserves, to reduce risk. 3. Focus on quality stocks. Logos of blue-chip companies. Explanation. In uncertain times, focus on companies with strong fundamentals, solid revenue, low debt, and consistent demand. These are more likely to weather economic storms. 4. Avoid emotional decisions. Investors panicking versus disciplined traders. Explanation. The worst thing you can do during a crash is to panic sell. Emotional decisions often lead to buying high and selling low, the exact opposite of what you want. 5. Keep an emergency fund, a piggy bank, a savings account statement. Explanation. Having cash on hand ensures you're not forced to sell investments at a loss during emergencies. 6. Stay informed. News headlines, financial reports. Explanation. Knowledge is power. Staying informed about market trends, economic policies, and company performance will help you make better decisions. Segment 4. Historical lessons from past crashes. Let's take a quick look at history. Major crashes like 1929, 1987, and 2008 were devastating, but they also taught us valuable lessons. 1. 1929. Great Depression. Lesson. Diversification and risk management are crucial. 2nd, 1987. Black Monday. Lesson. Don't let short-term panic dictate long-term decisions. 3rd, 2008. Financial crisis. Lesson. Avoid excessive debt and speculative investments. Host wrap-up. 4th segment. History proves that markets recover. The key is to learn from the past and prepare for the future. Conclusion and call to action. The stock market may feel chaotic right now, but remember this. Crashes are part of the market's natural cycle. They create opportunities for those who are patient, disciplined, and informed. If you found this video helpful, don't forget to like, share, and subscribe to Joy Richer for more insights on the economy, politics, and how they impact your life. Let us know in the comments, how are you navigating this volatile market? Motivational quote overlaid on a calming stock market chart. The best investment you can make is in your own knowledge.